let's look at the real estate business. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. I have a bunch of real estate ETFs here under sectors. So you can see here there's quite a mix, and the performance varies a lot. The best performing here from the low is the Homebuilders ETF. Huge gain, pretty close here to the 52-week highs. The thing is that when I look for these opportunities, I need to call what jumps at me. And as of late, there's been a bit of an increase in more bearish opportunities, but that is just how the cookie crumbles, and that is to be expected when the market has been on a very substantial run. So that is just something to take into account. If you look at some of the older videos, then you will see that there were more of these fantastic bullish opportunities. Okay, but it is just what it is. So what I have drawn in here for the XHB is these time cycles. And even when we go rather far back, the time cycles, they keep reappearing with quite, remarkable consistency. These are many years. Of course, the time cycles aren't perfect. It's rare for them to be that. Sometimes you see that the rising phase happens towards the middle of the time cycle. Sometimes the rising phase, it peaks, when you would expect the declining phase to be well developed. In this instance, with the latest rally, we have something similar to what we had before the lockdown plunge. We still are very, very elevated. So based on the cyclicality that has been rather consistent for approaching, decades, we expect there to be a pullback around the corner. Looking here at, these are weekly data points, so this is like super big picture. Here we have, the PPO, which measures the distance from the red 200-week moving average. We have, the last time we were this far away was back here, which was the beginning of a messy time for the Homebuilders. Previous times where we were elevated, we did have a very substantial pullback. RSI also here, you can see that it is rare for us to stay overbought. There usually is a pullback. So currently we do have a high risk situation here for the bulls. It is all about buying low and selling high, hence it's around here, here, and here, and here. That's when it makes sense to be, bullish, to be very, very like bullish. Oh, amazing bullish opportunity. But when we have these situations, when the alarm signals are in a different direction, that is when it makes sense to, flip. But what is so striking is that when people see these kinds of charts, instead of becoming cautious, they become even more bullish, which is, very, very. It is not what the big fish in the financial market does. They definitively subscribe to the buy low, sell high ethos. What has been supporting this super run is this purple 20-week moving average. You can see that that's where we have a pullback and then run higher. So let's look at some previous times where we have used that higher momentum support level. So here 69% 280 days, 24 to 17 days, 50-ish 161 days. You can see, you can see the numbers yourself here. Smaller numbers, 29-ish percent 285 days, 40-ish percent 385 days, and now we have 87% run based on that key support level. That is without breaking that support level over 322 days. Hence, when we compare the percentage move is the biggest of all the previous ones, going back here to the bottom of the financial crisis. Looking at the number of days, 322. So here we do have less than 322 days, but the percentage move is much smaller. So like objectively speaking, I mean, what is striking is that even when you look here at the low here of the financial crisis, you only had 70%. If we are even more generous here with the 20-week moving average, pushing it here, but that actually violates the rule, given that we did here break the 20-week, but then we push it up to 70, 80-ish%. Still, so objectively speaking, the latest move is the most euphoric we have seen. It just is. The numbers are here. It is what it is. The correlation here with S&P 500 is very strong at 97%. Looking here at the daily data points, zoom way back here, looking here at the PPO, the distance between price and the 200-day moving average, highly watched moving average, very elevated level, and a rather elevated RSI. Okay, so let's now explore further, looking here at the seasonality of the XHB Homebuilders. So April is usually a strong month, but you can see that May and June are substantially weaker, and these are, we're looking over a longer period here, 16 years. That's rather, significant. Now, and May and June usually have losses. Looking here at XHB on Finviz, they draw the trend lines, and we have broken out above the channel. Looking here, if we compare the REIT, the iShares Global REIT ETF with the XHB, comparing the price to earnings, you do see that the XHB is minus 13-ish% below. There are multiple ways to interpret the price earnings. One way is to think that, okay, it is lower, hence it's at a discount. Though there are also more, contrarian takes on price earnings. So the fundamental analysis, it's a very complicated field. But if you are going to do fundamental analysis, do these comparisons, you should definitely do it like this, where you are comparing within an industry. Looking at the dividend for REIT, it is, this is a REIT-ish dividend, 2.33%. Decent. The Homebuilders, it is different, but we could certainly make a strong case that it is it is within the real estate sector, 0.60%. So let's look here a bit at the holdings. So you can see that you do have multiple home improvement stocks within here. So yeah, it is a different but definitively real estate. So to sum up my take here on XHB, Homebuilders, okay, we do have a bubble. It just is. We have shown that very clearly with these measurements, looking at the time cycles, looking at also the seasonality. It strongly suggests that we would expect a pullback. Some of the previous pullbacks have been significant and have been very profitable for bears. To be perfectly clear, this one been a tricky one to short, which is why if you are going to use a bearish strategy, given the prior history here of the Homebuilders, it is a good idea to have a tighter stop, because you can be bearish and be profitable. Like here as an example, down here you do have 7% even, 8-ish% pullback. And if you tighten your stop as you're profiting, then when it starts to rally, then you would have, the position closed and sit there with a profit. So yeah, it is fully possible to make profit using bearish strategies during a bubble. Yeah, if you want to learn a lot more about, the markets, different methods and so on, then you can just subscribe here to this research, which gives you access to investing courses and seminars, and the top picks of the week, and the entire Excel file that you see in these videos. So have a fantastic week ahead, and be nimble.